TFNN. Headline News Update.
Okay, folks, Larry Pesavento sitting in for Steve Rhodes today, and it's all about interest rates. As you can see here, I've posted the chart of the yield on the 30-year Treasury bond, and we're all above 5% right now. You can see just a couple more pips up here, which I think we've already made it this morning when we hit 110 in the bonds, and that is a second standard deviation. Folks, if we start going much above this, there's going to be trouble, not only in Washington, D.C., but other places, because they're going to be looking at that dollar bill instead of looking at "In God We Trust." They're going to be looking at "In God We Trusted," and that's the problem. But we do have a really strong chance for that U.S. dollar to rally, and that's one of the things that we talked about yesterday, and we should focus on that today, along with some of the other things that we posted yesterday to see how they work. You know, sometimes they work, sometimes they don't work. But the thing that you want to do, be concerned on how much money you don't lose versus how much money you'd make. That's the whole key. I've been doing this for 17 years now for TFNN, and I can honestly say I don't buy something, and if it goes straight up for 8 days, I'm going to be in it, for 8 days. I might be in it for 2 or 3 days. But once it reaches that loss limit, folks, you just stand aside, because it's all probabilities. You don't know when you're going to be right, and you don't know when you're going to be wrong. To me, this is set up for one of the biggest short covering rallies we've seen in Treasury bonds in a long time. It hasn't happened yet, but it could. So that's one of the things that we're watching. I want to bring to your attention here, since we're on to this program, this is the dollar index. This is the one we were watching yesterday, and as you recall, we were saying we were at the absolute moment of truth here with this giant ABCD pattern. As you can see, we've had a beautiful ABCD down here. We've had a pretty nice rally so far today, and of course we were recommending shorting the euro yesterday, and that's working pretty good. But really, this is still in a downtrend. It could change in a moment's notice, probably related to interest rates, but we'll be covering that as we go through the show here today, and we'll see what else we can come up with. For some of the trades, we talked about stocks here yesterday on Steve's show, and we want to show you the ones that worked and the ones that didn't, and there were a couple of each, so we want to be watching those and learn from our mistakes. So that's what we're watching here this morning, so stay tuned.
In the world of